Good morning, good afternoon, wherever you are and whatever time zone you're in. Thank you for tuning in. It is Currency Queen, and it's been a while, but I'm back. And I wanted to go over a chart with a trade that I got into today. It's been a while since I've uploaded videos, but I have not stopped trading. I have slowed down, but the intensity is about to get real serious. Kind of been a little busy with the real life stuff and just trying to get back on track. So let's go over the charts. And we always start with the news. So we have the news pulled up here. And as you can tell, the only red folder we have today is the CPI for German. So if you're trading the euro dollar, or have traded the euro today, because most of the trading day is kind of gone. We're at lunchtime right about now. I usually get into the charts early in the morning at opening. So if you got into euro and you were able to survive the news and it was good for you, that's good stuff. But the only red folder we're seeing right now is the news for that. Everything else today is yellow. But today is NFP week. So I would advise everyone to continue to practice that wonderful risk management. And it has to be proper. And also just be careful in the market when news happens. Or it just may do something random. So always protect yourself with using correct risk management. So what I traded today was AU. Let's get into AU. There is no news as far as AU is concerned that I'm aware of. Around the time that I trade, there was something around, I think, 1:30 in the morning, but that had gone beyond, when I got into the charts. But I want to show you how neat this trade was for me, specifically. So what I typically do is start on the 4-hour chart. When I look on the 4-hour chart for something like this, I'm looking for a bias in trend. So I want to know, hey, is this going up, down, or sideways? That's all I'm looking for on the 4-hour. If something jumps out at me, or I noticed a certain candlestick pattern or a certain type of candlestick that prints and closes, and it's to my advantage or helps confirm my bias, then I'll get in. If not, I'm strictly using this for trend. And as you can see, the 200 MA, it is trending above that. And it is also, if you put a trend line, you'll see that it's still trending up. So that's two confluences. And I see a head and shoulders. It's an inverted head and shoulders pattern on the 4-hour. So I got my bias that it's going to be going up or continue to go up until proven otherwise. So once I get that bias, and if I also have my notes here that I print, especially when I have a really good trade, and we'll get into those notes here soon. So once I get my bias, I drop down to my 1-hour, and I kind of look at some of the other things too. But on my 1-hour, I want to be sure and draw my zones. I want to look at points of interest and see if there's any points of interest that'll confirm my bias. And then once I start marking up my zones, I have my little music going, so I be in tune with things. I'm just looking and glancing at the market, and if you're in the market long enough, you'll have an eye for it, and you'll get muscle memory, and you'll start seeing patterns that you frequently see, patterns that encourage you to get in or stay out. So that's what I'm doing on my 1-hour chart in this zone. Look here, and I have the demand zone drawn up on the 1-hour time frame. And as you can see, there was a higher high here in this zone. There was a higher high after that. Even though it dipped down, sometimes it's grabbing liquidity. So I looked at it and I was like, it doesn't give me enough validation in order for me to take that. So I waited some more. And you'll notice that in trading, you'll spend a lot of time being patient and waiting. As they say, trading can be boring for some, but I'm still passionate about it. So I still enjoy doing it. And I've recently been doing a lot of set it and forget it, and I've not been doing too bad. So when that trade did that here in this general area, I waited some more, and then it had a big volume run up. Now this is on the 1-hour chart, so it's pretty significant, but as it was going up, it was closing those fair value gaps. So there was no gaps here in order for me to say, So I waited some more. And let's play the chart as we see it, continue to evolve. And there was a break of structure where the red arrow is here, and bam, it hits into the demand zone. So I'm looking, I'm looking, and I'm like, okay, let's back up a little bit and see if we can show you when it actually did that. I want to back up and slow down. So if you don't have the paid version to where you can play and replay on your trades, it's pretty valuable. Suggest you invest in that at least if you are serious about your trading. So let's go back down and let's see, it's going to play out here. I was watching it. It was continuing to play out. I'm taking it extra slow right now. Bam, it dropped right there. If you can look, there was no news, but it was right before news hit. So the news, if you can tell, is down here in these areas. It kind of helps you with while you're on the chart, remembering, if you even already have it marked up, that there is going to be some news coming up. So I pay strong attention, and I have these on because you can have them on or off. So it just helps me. So that's another key thing to help you in your trading. So once it tapped into the demand zone on the hourly that I drew up, and there are some areas down here that have some small gaps. So I always kept that in mind because you can draw another zone here. But when I saw how it reacted in this specific zone with the rejection wick, and I'll drop down on the 30-minute to let you see that it had a rejection wick that closed. So let's continue to play. That is the area after that rejection wick on the 30-minute closed. I felt comfortable getting in. So this is where I got in, and it shot up. Looking at it on the 1 hour, and then it worked in that area for a minute. What I did was I put my stop loss here. That's when I set everything. When I looked at it on the 30-minute, I'll usually enter on the 15. But as you can see, the Maribosa. If you can see the candles here, the 30-minute kind of just signed the deal for me in that it was still trending above the 200 EMA. So I got in here, set my stop loss 11 pips, almost 12 pips away. And then I put my take profit up here, which is a 2 to 1 ratio. And that's kind of where I keep it at, because I notice if I try and extend it, I'll start to kind of retract from the wins that I want to have. So don't be greedy. Get in there, set your ratio that you're going to typically take, and be done with it. Once it hits your take profit, get out. So that's what I did today. So I let the trade play out. I kind of stay between 30 minutes and an hour when I'm watching it, but I typically enter on the 15-minute. So as it was kind of, doing its thing, I was like, and it's not showing the move that it made, but right before this move to where it violated, that was the winning move that helped me hit take profit, and it was a news move. So I stayed in during news, and as you can see, it wicked up, and once it hit that take profit, it took me out of the market, and then it wicked straight down. So news can be pretty volatile, so just be careful, and that's why it's important to set your perimeters for your trade and be done with it. Another thing that I did not mention was once the trade, I wish I could slow this down less than what it is, but once I got 50% in the trade, I moved my stop loss up. So as I was actually making money, my stop loss was coming up so that I can minimize loss. And essentially, if it goes up, high enough, be in profit, so that if it, goes in the opposite direction, I won't lose anything. I'll always be in the positive. So some of the key things that I want to take away from this is setting your demands, being aware of other demands around you in that same area, looking at your EMAs and making sure that your trend agrees with the EMAs. I use Fibonacci sometimes, but it has to be, it just depends on the setup, how and when I use my Fibonacci retracement tool. And so looking at the higher time frame for a bias is my 4 hour. I'll drop down to the 1 hour from there and look at my points of interest and draw at my zones. I typically get in on the 15-minute chart, sometimes the 30, but it's all surrounded around the hour time frame. So I kind of use multiple time frames to confirm. That's just how I'm comfortable. Because sometimes I want to look at multiple time frames to see, hey, are they all in agreement? Granted, your lower time frames are going to be a little less. I really wouldn't go by your lower time frames, because your lower time frames have to move in order to make your higher time frames what they are. So always go with the higher time frames as far as the trend. It can get kind of squirrely when you're scalping, but always once you get that bias, stick with it. Don't change it. So once I have at least 3 confluences, I'm going to execute my trade, like I said, on the 15-minute time frame, but looking at the hour for the trend and the actual trade play out. So once you do that and you get into the trade, once you execute, you are going to set your stop loss and your take profit and let the trade play out. I know a lot of us like to sit here and just, I used to have a habit of dropping down to the 1-minute chart and just watching all the activity on the 1-minute chart and getting out of my trade, because it was kind of scary to watch and I didn't want to lose any money. So if you're comfortable and you're experienced enough, set your trade and forget it. You can come back, check on it, just to make sure, it's still going in that direction here and there, but try to start relaxing, because once you have your perimeter set and your risk management is on point, you really don't have much to worry about, because you're comfortable losing whatever set amount that is, even if the market spikes or news hits and it's weird. Now, if you're trading news, that's different. You kind of want to be in the lower time frames and in the charts, but I typically trade on the 1 hour nowadays. So once you have that, you're not going to risk more than 1 to 5% of your account, and then that is your trading plan, essentially. That is mine. How I have an eye for the market is different. Everybody's going to have their own personal relationship with the market. If you're in it, stay in it. And whatever your trading plan is, you want to stick with it, rinse and repeat. And with saying that, after the trade is over, after the day is over, because sometimes mentally these trades can be like, whew, it can wear you down. So after the fact, whether you win or lose, you're going to always want to study those trades, get to know what you could have done better, learn how your emotional response is. If you're not journaling, make sure you're journaling these trades, and journaling. Some trade programs have the emotions tab in there, so you can put how you're feeling, what day was like before you traded, and that influences your trades. Mentally, you need to be clear mentally to be able to actually trade. You want a clear head when you're trading. That helps with discipline and making the right decisions. So with that being said, I had a really great trade today on AU. I can't stress enough how important it is to follow your plan. I'm happy to be back. Sorry I took so long. I just wanted to show you my trade for today. And if there's anything else, if you're not subscribed to my channel, make sure you hit that subscribe button. If you turn your notification bells on, you'll get every video that I upload, and I look forward to trading with you. If you like this video, make sure you hit that like button, and if you have any questions or comments, don't be afraid. Feel free to put a comment in there, and I'm pretty responsive. I'll answer it as soon as I get a chance. Thank you so much for watching. It's Currency Queen.